So, hello. How's everybody doing? Hope everybody's having a great day, great weekend, wherever you are, whatever you may be doing. This is 50 Pips, rocking and rolling here. No trade calls, no recommendations, or response for their own stuff. We're here for educational purpose only. So, what an ordeal. So, voice is back. So, we're back in action, guys. Let's do this. What's going on into this week? So, it should be a fairly interesting week with plenty of data points. Then we have BOJ, the Fed, and the BOE. And the little cherry on top of the cake is the non-farm payrolls at the end of the week. So keep in mind that we're going into month end, right? We got 2 days left, and basically the start of the week will be a fairly decent QT size. So if history is anything to go by, that should add a little bit of an extra weight in on equities. So our base case hasn't changed. Our base case was still that we were going to close the month sideways to heavy. We'll have to see what happens, but so far so good. Now, the first thing I think everybody is going to want to talk about or is going through is FANG. Now, our base case is still that we still have lower to probe, as we said, and here you can see we had a fairly ugly close to the week, and especially if we can get a little bit of traction, our base case is still that we've got to probe lower and potentially all the way back into this previous high here. So we think we have a good 5-6% to the downside. And again, if we get traction, it could be more, but clearly that's what we're looking for. I mean, in the way we've been looking at this is basically that Netflix was the first one to break, even though we'd seen some hints of some possible topping on some of the other charts, but Netflix really kicked it off with the break point, right? So with this gap down post the earnings, and our base case was as soon as we saw that gap down was, okay, this is the break. Odds are that we need to probe lower. You don't recover from that kind of action. We're seller here, right? We're aggressive seller, especially if you're not already here. So readers of the blog and followers of these updates know that we already thought these area offered a very, very interesting risk reward for a move back into this level, right? Into these highs, because you have these gap ups and gap downs and these patterns. So essentially this was your risk with this kind of reward. So very, very interesting. But once you got that, you see the very nice move, right? We gap down, we retrace into the 50 back. Nice sell zone, fairly tight risk if you're looking for the bigger correction, or if you're playing with stops above the 61.8. And here, we're looking to this to go to the downside. Now, on a daily close below these lows and below the 100 DMA, this could easily accelerate all the way back to 280s kind of zone, and that's what we've been looking for, and that's what we're looking for. So no real change in terms of Netflix. And you can see that if you look at the other charts, like for example Apple, very heavy close there. The week was not pretty, but you already had hints on the previous day with this negative close on the daily. You can look at Amazon. Where's Amazon? Ugly daily close. You can see the pressure there on the weekly, but really the daily is a very, very ugly one. Then we got another of the ones that broke is essentially Facebook. Again, you don't buy this kind of gap down, right? Now, truth be told, our base case was once we had that delete Facebook is that we wouldn't be buying any of the moves higher, and we did ramp up about 40%. But we've talked about this a lot. All these low volume chops, these short squeezes, they tend to give back whatever move they put in a fraction of the time. So you see here, we're closing at all-time highs. This is our route, right, from May all the way into these new highs, and then we give it back in an overnight session. I mean, this is an extreme example, but again, clearly here our base is still that there's a lot more room to go to the downside on Facebook. And if you look at talking about things that broke, Twitter's not looking pretty. So when you're starting to see these things happen more and more across the board, you really want to be cautious about buying the dip this time if that's the way you're inclined, right? And if you're looking at the equities, before we go on to our favorite chart, but ES, still that 2800 is going to be pivotal. If you see how we closed the week, you see how the sellers came in right at the end of the week. But not all is lost for the bulls, because we're still holding above that 2800. So the bears really need to get it back below here quick. If they can get it back below here looking ugly and quick, then we expect 27 to come into play. And you can see the action on the NASDAQ, right, which has been the chart that has been ramped the most in the most silly fashion in our way of looking at things. And you can see that the weekly basically is pretty only if you're bearish, not if you're bullish. So here there's a lot of room to the downside, even for this to completely stay in trend, right? From here, we could easily go down 9% into the 50, and this is still uber bullish, right? This could easily come down 18%. This could easily come down 30% and still be in trend with these moving averages. But base case here is watch out if this accelerates, because this could get ugly. Now, our favorite chart on the futures was the Russell. We've been talking about this one for a long time, as our base case has been essentially that we had to come back down, and we're going to come back down and test those 1600s. You see these daily closes, what we've talked about. It's very rare not to get follow through when you get this kind of action. So whether you were already short or on these presses back in here, you see the risk compared to the reward on these moves lower is very, very interesting, especially when you're continuing to see these ugly closes at highs, and essentially it's still making lower highs. Very, very nice chart. So that's one we'll be very focused on going into this week too. Now on the DXY, so on the dollar side, no big change to the DXY. We've received a lot of snarky comments about why do you keep on, why are you being so stubborn on the bearish side on DXY? And I'd like to just flip that around and say, why are you being so stubborn to the bullish side, right? Our base case is that we're still stuck inside a range. This is the range. And unless we break out, then it's still a range play. And if anything, we'd be looking for a move back to mid of this range. So you can see every time it's moving back above that 95, it just can't attract new buyers, right? It can't attract new buyers and just keeps on getting smacked down. So it's not that we're structurally or biased to the downside, is that we're going to let the chart guide us. So unless we get sustained closes above the 95, weekly closes above the 95, our base case is still that this is some kind of a complex top inside a range, and that will come back down and test mid at the very least, if not possible even the opposite side of the range. Now, how long before Trump tweets again about the strong dollar? We would not be surprised if that happens relatively soon. And you see this is playing out across the board on all those other charts. So Euro USD, this is another one that's taking some time, and we've been getting a lot of flack on, but our base case is still, unless we get closes below the 115, is that we have to retest higher, and we expect 118.50 to come into play before the 115. And again, USD JPY, see how we sold off, see how that's a beautiful continuation of that negative close on the weekly, right at that channel. So this is still in play. And also, if you look at USD CHF, this is also playing out a very, very nice double top that we've been playing, and our base case is still, well, triple top, quadruple. It's just a level where it's failed many times before. And these kind of candles are very interesting because they offer very nice asymmetric risk reward. So our base case hasn't changed here, is that close, we're going to see a retest of the 98s at the very least. So that's all in play. Now, what could potentially throw a knife in the spanner? Well, what's happening here is USD yuan, and basically this is the potential problem child, right? So what's happening is, as you know, gold has found a new dance partner, right? Whereas gold was intrinsically linked to gold, and that they were the tango champions. Now gold has a new partner, and that's USD CNH. So right now there's not that much point of trying to get a feel for that by looking at yen. You got to look at USD CNH. This is all that matters, and you can look at gold is pretty much tracking, right? So whether they've pegged it at a certain level, we'll have to see, but this is what you want to keep an eye on. So intraday, this could get funky. This could get very, very ugly if we trade back above the 7. I would still expect to see, you know, verbal intervention of some sort here or there from Trump and co to just, they're very, very, you know, the whole tariff spat, whether it's going to accelerate, whether it's going to start to affect Apple, etc. It's a big deal. But if USD CNH continues to ramp, well, you know, the effect is mitigated by a certain extent. So again, this is a key chart you have to keep an eye out for. And gun to the head, we would be short here. We don't trade this, but we would expect, even though it could resolve in ugly spikes to the upside, we still think the velocity of the move in terms of possible sustained or meat of the move here is to the downside. We'll have to wait and see. It's a really tricky one. And again, this leads us back to gold, where it's still on the suffering. It's still having a hard time catching a bid. As long as that USD CNH holds bid, it's very hard. It's going to be very, very hard for this to get a bit of breathing space to the upside. Now you see it's still holding below that key support zone, and it closed the week below the 200-week moving average. And the big question is now is it going to close the month, or is it going to manage to hold the month above the 50-month moving average? That's what you want to keep an eye out for here. Now remember, we're still looking at this potential seasonal play for the coming months, and you know, usually July is nothing to write home about for gold, but August and September tend to be bullish months. So this is very, very interesting, and we continue to be looking to either hold or build some kind of a swing long here. And if we can close the week back above 1250, we would not be surprised to see that 1300 come very, very quickly, but one thing at a time. This is going to be the key level to deal with, at least for starters. Okay, so again, a lot of moving parts. Let's see what we get. Don't forget, BOJ is probably the most important one in terms of three central banks going into this week. Let's see what we get. Again, have an awesome one. So happy to be back with you guys. So happy to be able to speak again. Take care. Thanks for liking. Thanks for sharing. And hit me up on Twitter if you want me to look at any chart. Take care, guys. Bye-bye.